Have you ever really asked yourself how much money you'd need to set aside every single month if you wanted to stop working in just 10 years? Not 30, not 40, but 10? Most people hear that and think it's a fantasy. They imagine it would take millions or some secret Wall Street formula hidden behind closed doors. But the truth is much simpler. The answer isn't locked in an investment bank. It's sitting in front of you in plain math. The real question isn't whether it can be done. It's whether you're willing to understand the numbers, the trade-offs, and the discipline it takes to get there. Because the figure most people imagine is usually way off. Some think you'd need to invest tens of thousands every month. Others believe a few hundred will do. But the truth lives somewhere in between. And it depends on how money actually grows, how inflation eats into that growth, and how consistent you can be. If you stay with me until the end, you'll know the exact number, down to the dollar, that can buy back your freedom in only 10 years. Let's start with why this goal feels so impossible in the first place. For decades, we've been told one story: work for 40 years, save a little, and when you're too old to work, that's when you finally get to live. That story has been repeated so many times that it feels like the only path. But is it? Or is it just the one that keeps you working the longest? Imagine sitting down right now and writing out your monthly expenses: rent, food, transportation, healthcare, the usual extras. Let's say it all adds up to about $3,000 a month. That's $36,000 a year. If you could somehow build a system that generated that income without you showing up to work, you'd be financially free. Not rich with yachts and jets, but rich in time, control, and peace. That's the real target. The key to reaching it is compounding, the quiet force that makes money grow on its own. Imagine planting a small tree. At first, nothing seems to happen. Then slowly, the trunk thickens, the branches spread, and one day it's heavy with fruit. That's what happens when you invest consistently. The early years feel painfully slow, but those who stick through the quiet years are the ones who later watch their money work harder than they do. But you don't have decades to wait. You've got 10 years, which means you need to water that tree aggressively. You need to invest more, choose the right assets, and understand the real impact of inflation, taxes, and fees. Because the numbers you see on charts aren't the numbers you'll live on. Say you invest $1,000 a month for 10 years at 7% returns. On paper, you'd have about $175,000. But after adjusting for 3% inflation every year, that money's worth more, like $135,000. That's why real return, the growth after inflation, taxes, and fees, is what truly matters. If your investments earn 8%, but you lose 3 to inflation, 1 to taxes, and 0.5% to fees, your real return is closer to 3.5%. That tiny difference compounds into tens of thousands lost, and most people never realize it until it's too late. So let's ask again, how much do you actually need to invest each month to retire in 10 years? The number isn't as crazy as you might think, but it's not small either. Let's test a few realities. If you play it safe with high-yield savings or government bonds at 5%, investing $1,500 a month for 10 years gives you roughly $230,000 before inflation, about $175,000 in real terms. That's progress, but not enough to live fully. If you move into real estate investment trusts, earning around 5% and keeping pace with inflation, that grows closer to $300,000. That might generate about $1,200 to $1,500 a month in passive income. Better, but still modest. Now, if you invest that same $1,500 monthly in a broad stock market index fund, earning about 10% before inflation, around 7% real, you could reach over $340,000. That portfolio could safely pay out around $1,400 to $1,600 a month, inflation adjusted. You're getting close to freedom. Now let's connect the dots. To live on $3,000 a month, $36,000 a year, you'd need a portfolio of roughly $900,000 using the classic 4% withdrawal rule. That's the amount that can sustain you indefinitely. So how do you get there in 10 years? Mathematically, you'd need to invest about $5,000 to $5,500 every month in assets growing around 7% after inflation. For most people, that number sounds unreachable, and that's why they stop listening. But here's the secret. There are levers you can pull. Lifestyle is the first one. If you can live comfortably on $2,000 a month instead of $3,000, your goal drops from $900,000 to $600,000. That means you'd need closer to $3,700 a month in investments, not $5,500. Go leaner. Save $1,500 a month in expenses And now the target's about 450,000. You'd only need around 2,700 monthly investments. Suddenly, the goal moves from impossible to achievable. The second lever is income growth. If you stay stuck at the same salary, then yes, saving 3 or 4,000 a month sounds brutal. But if you build skills, start a side hustle, or launch something scalable, like a YouTube channel, it's different. Many channels today earn that amount monthly, sometimes passively, which can all be funneled directly into your investments. The same discipline that grows your income can compound your freedom. So here's the number. If you want to retire in 10 years with a reasonable lifestyle, you'll need to invest between $3,000 and $4,000 every single month into a diversified portfolio, earning around 7% after inflation. That's the truth. It's not 200 a month. It's not even 1,000. The price of freedom in a decade is higher, but it's not out of reach. And once you know the number, you can design your life around it. You can cut costs, raise income, automate investments, and protect yourself from emotional mistakes. Automation, by the way, is the real secret weapon. If you rely on willpower, you'll fail. If you rely on motivation, you'll fail. But if you automate your investing, set up transfers that happen no matter what, you win by default. Automation doesn't get scared when markets dip. It doesn't decide to buy a new car instead of investing. It just executes. That's how freedom is built quietly, month by month. And think about what that freedom really means. Waking up one morning, checking your account, and realizing your portfolio just made you $4,000 while you slept. Telling your boss you're done, not because you're angry, but because you don't need the paycheck. Designing your days around what you love, not what you have to do. That's not a fantasy. It's math plus discipline. The hardest part is the beginning. The first few years feel slow, unrewarding, even frustrating. You're doing the heavy lifting while your portfolio is tiny. But around year 7, the momentum flips. Your investments start growing faster than your contributions. By year 10, your money is working harder than you are. That's when the snowball turns into an avalanche. Freedom, though, comes with a cost. Discipline today. Saying no to small pleasures now so you can say yes to anything later. Every dollar you spend on something you don't need isn't just gone. It's one less brick in the foundation of your future freedom. So here it is, plain and simple. To retire in 10 years, you'll likely need to invest $3,000 to $4,000 a month in assets that grow around 7% after inflation. Lower your expenses and that number drops. Grow your income and it becomes realistic. Do both and the odds shift massively in your favor. Whether it takes 10, 12, or 15 years doesn't matter. The only thing that matters is that you start and you keep going. Most people never start. Many start but don't continue. Only a few stay consistent long enough to see the results. Which one will you be? Because 10 years from now, you'll look back, and the question won't be how much you invested every month. It'll be whether you invested at all. Thanks for watching InvestingFlix, where smart money learns smarter moves. Subscribe for more insights that grow your wealth.